2022 will end with a stark reminder that we are still in a bull market correction. The stock market is contending with the overhang of inflation, Fed rate hikes, recession fears, and a long way to go to overcome the all-time highs, as is the case of Nasdaq. Investors may need to consider ways to mitigate downside risks should the market continue losing value. Today we will look at 3 inverse ETFs that have the potential to rise anytime the Nasdaq 100 falls. Specifically, we will analyze the charts of the PSQ, which is a 1x inverse fund, then look at QID, a 2x leverage inverse fund, and finally SQQQ, which is a 3x leverage inverse fund. And I'll share a very simple channel work technique you can use to time entries and exits into these ETFs. Hi everyone, it's Gonzalo here with another vocabTA episode. Thanks so much for tuning in. In this channel, I offer technical views on global markets, aiming to put investors and financial analysts ahead of the game by providing actionable technical alerts and key dates. Let's get right down into it. We start with the ProShares short QQQ. The chart shows the PSQ poised for a breakout of the multi-year downtrend line. A line intersection at the beginning of January opens the possibility for the upside breakout to materialize soon. Notice how the vertical lines drawn from recent swing lows intersect with the horizontal March 2020 resistance. The dashed lines you see here are projected parallel lines anchored on these intersections, so we get a provisional target zone to work with and also a clue as far as the duration and the extent of the advance. We could see this breakout follow through, culminating anywhere between April and September 2023. Similarly, the ultra-short QQQ chart has been moving towards the multi-year descending resistance line anchored in the crash episodes from 2008, 2018 and March 2020. With the break of this line, this inverse ETF could embark on a journey towards the March 2020 nominal high. Notice the intersection in January 2024, hinting that the corrective movement in the Nasdaq could last for an entire year. I wouldn't expect this target to be hit in a straight line. Therefore, an in and out strategy would be required here. If a breakout materializes, the first target is the thick green ascending line and its intersection with the first dashed downtrend line. These are potential lines drawn upon the confluence of the vertical lines from critical swing lows and horizontal ones corresponding to the spike highs. Remember, this is a 2x leverage instrument and should be used with a shorter time horizon in mind. As for the ProShares UltraPro short QQQ, we could see the potential for this ETF to rise during most of 2023. Notice how I use the Fibonacci channels to confirm the placement of potential lines. Also here in this exercise, similar as I did for the other ones, trace here horizontal lines based on the recent swing highs and swing lows, and let these lines intersect with some of the, in this case, of the Fibonacci extension lines. These are lines based on past price action. We have here the interim Fibonacci lines and also the extension ones. And look how the intersections of these critical swing highs here from 2018 to 2020, they intersect, and also here this polarity shift between a bottom here, break to the downside and recover and retest of this level from below. We have this ascending line stemming from here, and all these intersections form a linear line that corresponds in this case to a Fibonacci extension. So we can infer from here that any of these lines that intersect with this potential line here, this extension line, become important ones. So this line here from this first halt here in August-September 2020 becomes an important line, an important intersection that is pointing here to the later part of 2023, and thereby we are using this as a target in time to work with. If shorting tech stocks turns you off, another option to consider is TZA, the Direction Daily Small Cap Bear 3x shares, which offers a 3x daily inverse exposure to US small cap companies as defined by the Russell 2000. Also here, be careful. In a bull market, this instrument can kill a portfolio because of the leverage factor 3x. I like this chart because of the triple intersection made of the March 2020 downtrend line, a horizontal line that started at the runaway gap in November of the same year, and an ascending resistance made of the swing highs mustered in 2022. Besides the triple intersection pointing to March-April 2023, the price is about to hurdle a downtrend line from the 2009 and 2018 spikes. From all the three ETFs we have seen before based on the Nasdaq, this one could be the first to print a signal that stocks are still to endure another downside leg. In the description below, you can find the links to all these charts so you can import them to the Tradingview platform. So let's go back here to the ProShares UltraPro short QQQ on a weekly chart. Let's dive into the daily chart. This is the one that is about to break an interim line, and the first destination would be that descending line from the March 2020 highs, corresponding also to a contact point in the December 18 high. So this is the one. This is the only ETF here, because of the 3x leverage factor that has been going further down during the rise in the Nasdaq, and is now a way to accomplish here to reach that line, which is about to be broken to the upside in the other ETFs. But basically, the game here is the same one. We are using simply here an interim line as the first signal. But in order to time your entries and exits and to fine-tune the execution, it's worth going down into smaller time frames and repeat the exercise we've been doing here on the weekly. In this case, we'll try to find a similar 45-degree angle here and find an angle that is repeated across the recent history and also past history, the large past history of that particular instrument, and thereby constructing a grid. And here the play would be simply to use those lines and break out of these lines, and the area between these broken lines on a lower time frame and the lines stemming from a higher time frame, and capitalize on those zones here and exit the trades as soon as the price encounters the next destination, the next line, and wait for the resolution of that line. In this instance, we are here breaking this descending yellow line that is simply a parallel line to other lines in the recent past. So we have here a breakout. We could then thereby enter a long trade here on this ETF and target the upper blue trend line, the descending one. Once there, we wait if there is a reversal upon the first contact, or if this follows through and break to the upside, and then a pullback to the line, testing it as support. And as soon as the price continues up, then we can capitalize on the next move, on the next area between lines. And this same exercise we can repeat then going into lower time frames, down to the tick if you prefer, in order to fine-tune your entries and exits. This is a 3x instrument, 3x leverage, so be very careful. It's intended to be used in and out with a very short term horizon in mind. Before continuing to listen to the video, consider dropping a like and subscribe to the channel if you're yet to do so. Thanks for watching my videos. So wrapping up, there are several strategies for using inverse ETFs. Some traders may use them as a directional bet, but I've introduced these instruments here to offer you a hedge against falling stock prices so that you can mitigate losses in your portfolio. Very important to remember, except for the PSQ, all these ETFs use leverage and are thereby impacted by the compounding of daily returns. The more fluctuations within a time period, the lesser the gains obtained. It is therefore essential to time your market moves appropriately to minimize risks associated with the compounding effect. The higher the leverage, the shorter should be the holding period. There's another video in this channel where I cover the stock price of Meta, Facebook, as it has been underperforming other tech stocks. It can be used to plan risk scenarios for the Nasdaq as well. That's all I got for you today, folks. Until the next time, be safe.